Now, making decisions on what stocks to invest in is quite an art, but how do the professionals do it on a large scale? Ken Till is a fund manager for Nucleus Global, and he joins us in the studio this evening to talk about how fund managers make their investment decisions. Thanks for joining us, Ken.
Thank you, Julia.
Now, firstly, to start off with, there seems to be a bit of a mystique surrounding fund managers. A lot of retail investors think that perhaps you trade on information that normal, everyday investors don't have access to. Is that true?
Well, obviously under disclosure rules you can't get access to information that the market can't, but probably the biggest advantage that fund managers have really is access to management. Now, if you're a large shareholder of a company, or even just a potentially large shareholder, you can get access to the CEO or the CFO. Give them the ring and ask them the questions that you want to ask. Now, obviously, when a company will present to the stock exchange or to investors, it really is presenting the case that it wants to make, and it can put the right spin on it from its perspective. So having the opportunity to ask the questions you want can be quite an advantage. It's also often advantageous just to be able to see the way that management will react to your questions, and that can be even just little things like the change in their tone of voice, or if you're having a one-on-one meeting, the change in their body language when you ask them a question, and that can be an awful lot more revealing than what they actually say.
So when you do get these opportunities to talk one-on-one with CEOs and people who manage the actual business, what type of information are you trying to glean?
Well, often actually the best sources is to ask companies about their competitors and how their competitors are faring, which might seem a little bit counterintuitive, but companies do tend to, as I said, want to put their best foot forward on what's happening with their operations, but they'll often be an awful lot more candid as to what's happening with their competitors. So you can actually glean some of your most useful information by asking questions not about that company, but about another company that you're actually interested in.
So you have access to the people who actually run the show, which is a huge advantage. Now, retail investors tend to rely on announcements that come out about the company, fundamental analysis and technical analysis to make their investment decisions. What about fund managers? Do they use any special tools to make investment decisions?
Well, look, everyone does it a little bit differently, obviously, but I can run you through how we do it at Nucleus. The first thing we do every month is we'll run a very basic quant screen on the stocks within our investment universe. So
now, when you talk about a quant screen, you're talking about crunching the numbers.
Absolutely. So it's fairly simple. It's really looking at factors like price-earnings ratios, dividend yields, returns on equity. We'll also look at things like earnings momentum on a consensus view. So that is, are other analysts in the market upgrading or downgrading their expectations for earnings of the stocks? Once we've done that, we'll get a short list of companies that we might find quite interesting, and that's when we go off and we do the valuations. Now, how we do our valuations and how a lot of people on the market do them is quite simply just take a present value of the forecast cash flows of the business at an appropriate discount rate. Once you've got that valuation, you then need to actually have a look at some of the risk factors of the company, and that's when you'll go and talk to management. So in our business, and we're investing in infrastructure companies, the things that we really like to look for are, what's the financial risks associated with the company? Do they have too much debt? Do they have big refinancings coming up? We'll also look at, say, regulatory risk, particularly in the utility space. A lot of utilities are heavily regulated, and what we really want to know is there the chance the regulator will change the regulation to make it a lot less favourable for the company. And the other thing, obviously, is to get a bit of a handle on the competence of the management. And the standard sort of questions you'll ask there will be around things like how they make their capital allocation decisions and acquisitions and so forth.
Okay, now you mentioned the discounted cash flow method to try and value a company, and that involves taking sort of what you think the company is going to earn and adding them up into a valuation for the stock. But given this environment where not even companies are giving an outlook for what they're going to be making, how do you evaluate what a company is really worth when there's not even a guidance from companies?
Well, I mean, you have to make it your best guess, really, and some companies give guidance and some don't, but I mean, I guess that's your job as a fund manager to try and forecast what you think those cash flows are.
So it sounds like you have a special crystal ball. If you could lend it to me for the next week.
If I had a crystal ball, I'd probably have retired by now, Julia, but no such luck.
Now, I want to concentrate on your area of expertise, and that's infrastructure. And infrastructure funds have been pretty big in Australia. What's happening in that space at the moment? Are they being shattered with the rest of the market? And what's your outlook for infrastructure funds?
Well, you've got to differentiate between infrastructure in Australia and in the US and Europe. And we've had quite a different experience here. It's really a function of the fact that, Australia has pioneered what I'd like to call the external manager model, which is where, investment banks or financial engineers have acquired an infrastructure business, and in order to make it attractive to investors, what they've done is they've taken an awful lot of debt so they can pay very high dividends. Unfortunately, these dividends have not been paid out of operating cash flow, and in a lot of cases the companies have had to use what I'd call accounting tricks to manufacture some profits. And that's really tactics such as increasing the value of assets within their subsidiaries to generate a profit in the parent company such that they can repay dividends.
Names?
No, I can't do that.
We can have a pretty good guess.
But you can work it out for yourself, I'm sure.
Okay, so when you look at infrastructure funds, you look at Australian infrastructure funds, US and the UK. How does Australia compare to the US and the UK?
Well, interestingly, we actually don't hold any investments in Australia at the moment, and that's just for the reason I've just mentioned, that, what some of these external managers have done is they've taken a very low-risk investment and they've turned it into a high-risk investment by excessive gearing. Now, if investors want to gear at their personal level, they're free to do so. But what we're trying to offer investors is a low-risk investment, and an over-geared company certainly isn't that.
Because usually infrastructure funds, they invest in toll roads, and that's sort of a steady flow of funds. It sounds like a business to print money.
Well, it's interesting. I mean, a lot of the focus in Australia has been on things like toll roads and airports, but globally, around about 90% of the capitalisation of the infrastructure and utility sector is actually utilities, many of which are quite highly regulated.
So when you look at an infrastructure fund or a particular project, what is it that you're looking for before you invest?
Well, we're really looking for something that's got very stable cash flows, that's got a solid regulatory environment, and we see this a lot actually particularly in the utility space in the US and Europe. I mean, there are actually companies in our portfolio that have been listed for over 100 years and that have paid dividends consistently throughout that time, including through the Great Depression. So if you've got a company with robust cash flows that can facilitate that, that's the kind of company that's very interesting to us.
Okay, so now you manage the infrastructure fund at Nucleus Global.
Well, I'm one of the fund managers there.
Are there many infrastructure fund managers in Australia?
Oh, there's half a dozen in Australia, but actually very few worldwide. It's Australia has been very much a pioneer in this space. So the funny thing is that we're investing globally, but all our competition is actually local.
And any last tips for people watching? Secret of fund manager?
Oh, look, I don't think there's too many secrets to anything, but in the current market, I mean, obviously no one knows exactly where it's going to go, but being in the defensive area of the market, in a time where the economy is contracting and we're in for a pretty long recession and a slow recovery, I think being in the defensive area of the market generally is where you want to be.
So infrastructure is a good space to be at the moment.
Yeah, but I would obviously tend more towards utilities and utilities that don't have excessive gearing.
Lots of great information and tips there. Thank you very much for joining us, Ken.
Thank you.